Hello everyone, Michael Madden here with a trading lesson on triangles. This week we are seeing a nice breakout from consolidating price action in Ripple or XRP. And it was a really great example on how we use the key levels with regard to the price patterns or the Elliott wave patterns we're working with, and how they're useful to one creating a trade plan around a triangle pattern, especially when the price action presents opposing directional breakouts. So let's take a look at the recent price action in XRP and see how we went about such a dilemma. In front of you are the two 6-hour charts that we were working with within the Pro Services. So you can see we have a bullish and bearish scenario. Basically, we have consolidating price action from the peak of 0.7520. Quite a sharp push lower, so we were considering that it could be the A wave within a zigzag unfolding for wave 2, but also sometimes within the triangle pattern, the A wave can be a sharp and brief pullback. So overall, what's important here is that both of these counts, be it the purple 1-2 scenario or be it the fourth wave triangle within the still unfolding purple wave 1, they are both suggesting the higher degree trend is up. So the 1-2 scenario is looking for a reversal in the third wave once this correction ends, and the fourth wave triangle is looking for the price action to resume the uptrend within a still unfolding purple wave 1. As you can see from the key levels highlighted on the charts, we have a solid line for this upper key level for the bearish scenario. So we do not want to see price action trade above 0.5995. And if price action breaks below the dashed line at 0.4554, that would indicate wave E is in place and the price action is thrusting out of the triangle. Then moving across to the bullish scenario, trading above the dashed line at 0.5995 would favor wave E is in place and that wave 5 is thrusting higher. And if we trade below 0.4554, that would negate this already completed triangle, and we could favor wave C is unfolding as per the bearish count. So we can see that the identical key levels have major significance to each of these outlooks. Let's now take a look at one of the intraday updates. So here is the 1-hour chart that we are working with, and this is the B wave rally, wave E of B for the bearish scenario. So in the text we're saying XRP is trading at a decisive juncture, and that we are using 0.5133 and 0.5995 as the near-term key levels to guide us. So we know that this is a decisive juncture, and we know that there's potential to the upside or the downside, but we need to keep those key levels in mind, and if possible, zone in that range that we can have an early warning if we get a breakout. Pulling back below 0.5133 with 0.5995 still intact will be early evidence to favor a bearish triangle has ended. That is because under this ABC rally, we would favor that wave C was in place if the price action started to trade below or overlap with the green wave A peak. So that's one piece of early information that we have. Printing above 0.5995 will be evidence to favor the bullish outlook. So you can see here now how we have actually raised the lower key level up to 0.5113, which creates a smaller zone of risk. And now we are watching those two levels closely within the intraday service. And here, a few sessions later, on another update from the hourly time frame, we have raised the lower near-term key level to 0.5349 and will continue to use 0.5995 as the upper key level. Violation of either is required to favor one count over the other. So now we have reduced the key levels that we're watching to a very fine zone. And if we go back and just quickly look at our higher time frame chart, just to see the potential that one would have if the price action was to break out on either direction. So under this wave B scenario, we're looking for price action to at least print below 0.3425 because we'd expect wave C to at least test that low. So that's quite a significant decline from where the price action is currently trading. So this is actually on the 26th. So price action now is trading closer to the near-term key level here at 0.5995. And just if we move on to the bullish outlook, if the price action is to print above 0.5995, we're favoring the bullish triangle is in place. And under this scenario, we're looking for price action to rally above 0.7520 in 5 waves for wave 5. And bear in mind, a thrust from a triangle, we're looking for the price action to move in a swift and in an aggressive manner. This is why triangles and then ending diagonals are my favorite patterns, because of the speed at which the price action can go within our favor. It can often be a rapid return on one's investment. And here I've switched over to the Currency Pro Services webpage, and we're looking now at XRP on the 4th of April. So you can see from this price action that XRP has taken out the key level we were working with for the upside, 0.5995. So we have evidence now to favor the bullish triangle is unfolding, and we can look higher. At this juncture, we're looking for at least a print above 0.7520, but more importantly, we require a 5-wave advance to unfold for blue wave 5. Here on the 90-minute chart, we have this 1-2-1-2 scenario, which, as you know, is a very bullish setup, and we have a key level at 0.5686, looking for price action to head higher in a third of a third. A print above 0.6413 could trigger upside acceleration under such a scenario. Just be aware that, of course, it takes a print above 0.6485 to totally dismiss the bearish pattern or the bearish triangle. However, as from the previous discussion, the evidence is growing that the bullish scenario is actually unfolding. And you can see price action is continuing to push higher, and then we do start to see the upside impulsive price action that we'd expect from the third wave, but also from the thrust from a triangle. And then continuing with the price action, we have the base channels established. Price action breaks out, pulling back to our channel, continuing to push higher. And we're raising our key level as the price action continues on its upside. So at this juncture, we were key level raised to 0.6413. And then you can see the price action then continues to push higher. We see some fourth waves unfold within this third wave. And if we just bring it up to this morning's update, we can see that we're getting the price action that we expect from the thrust from a triangle. And that all came from the key levels that we continue to monitor, and we were able to zone in on our price action from our 6-hour chart within the intraday service. So I just thought I'd put that video together just as an example of how we can use our key levels, especially at times when we can run into a juncture where we've got opposing directions to consider. And please do not forget, the other option that one has in such a scenario is to do nothing. Wait until such a juncture resolves itself and you have a higher probability trade on your hands. So don't forget that we have key levels, but we also have that decision to do nothing. Thank you for taking the time to watch the video. If you have any questions, queries or compliments, don't hesitate to email in and I will get back to you. Thank you very much.